right now. Sachin Shah of Emkay is with us. Sachin, good morning. First, a word on Hero Moto itself. Big surge in today's trade. Do you think this stock is good for more?
Well, actually, we've been investing in this stock for a while now, so that's the first disclosure that I would like to make. If you see the last 2-3 months of volume numbers coming in from the company, I think they are fairly good. In fact, it has been a pleasant surprise after the first quarter numbers, where the volume growth was almost down by 6, 7, 8%. But now, if you look at the YTD numbers, I think it would be nearly flat. And I think there has been a press release by the company recently where it talks about that they have sold almost 1 million bikes in this festive season. I think which is a fairly strong number. Not only that, if you look at the second quarter results, they were also fairly good in terms of the profitability, right? And which came not only from the higher gross margins, which is the raw material benefit, but which also came from they had a better higher realization, which means the product mix is getting better as far as the overall sales is concerned. So and of course, if you look at the valuations, I think they'll do probably close to about 150 rupees of EPS in that range for March 16 itself, which means such a strong franchise with almost 52% kind of market share in the motorcycle market, domestic motorcycle market, and profitable market share, available at probably about 17-18 times just 6 months forward. And probably we do expect it to grow in the range of about 15-20% compounded for next 2-3 years. So if somebody is looking at a compounded return of 15-20% compounded, Hero Motors does offer that kind of potential.
Okay. Sachin, if you had to just extend that theme about domestic consumption and the festive season being better, and that's what a couple of companies have already indicated to us, the likes of even Titan. In that context, which are the other companies that you might like in the same theme?
Well, so if you speak of the auto, so clearly Hero has done well. Even if you look at Mahindra and Mahindra, I read somewhere today that they are now looking to increase their production of the latest model TUV 300 to almost some 6,000 units a month. Again, that's one company which has been available at fairly attractive valuations, and we own that stock also in our portfolio PMS. I think even other companies like Maruti, Bajaj Auto, all of them should do well. That's clearly one space. So basically, auto is clearly one space which should do well. With the urban demand coming back in the economy, I think semi-urban rural will still be a little subdued with the kind of the monsoons that we've had. But I think as far as the urban demand is concerned, so some of these auto majors should really benefit in the next 6 to 9 months.
Sachin, will you look at aviation stocks? We have seen a bit of a re-rating, both on account of big fall in crude prices and the Indigo listing. Indigo itself has done remarkably well, but others like Jet, SpiceJet doing well as well.
Well, as a trend, very clearly, the aviation is one sector where you can say where the consumers are completely, clinched on to, right, as a trend. Like today, the urban middle class is first going to look at the airfares and then look at the railway bookings availability. If you look at the first 6, 7, 8 months in terms of their airline passenger traffic, I think it's probably growing at 20-25% in that kind of a range. So clearly that's one big trend that we are seeing as far as the airlines business is concerned. Of course, they have had an extra benefit because of the lower raw material price, which is the crude, which is almost 40% of their revenues, and which is almost halved in the last 1 year or so. So obviously their operating margins are now much better. And of course, if you look at the Indigo numbers in the last 3, 4, 5 years, what they have actually proved is that it's just about execution. And the way they have executed their business, they have made tons of cash, they've generated tons of profits in the last 4 or 5 years. So clearly that's one space that one needs to look at. But I think Indigo, after this kind of run up, I think the valuations are now a bit stretched or maybe are fully priced. So I would like to wait and watch at this point in time rather than jump at the current valuations.
Okay. Sachin, ICICI Bank, you look at that stock, how did you read the life insurance business stake sale and the fact that maybe, they'll have more armor in terms of provisioning now?
Well, the management has been talking about unlocking value in some of their businesses, and which is exactly what has been happening. So the good thing is that they are basically walking the talk that they have been doing in the last few quarters now. But I think the more important thing is the way the bank has transformed itself in the last 5 years. If you look at, say, in the year 2010, the CASA ratio of this bank was probably under 20%. Today it's almost 43-44%, comparable to the best in the sector, which is HDFC Bank or Axis or whoever, right? If you look at their capital adequacy ratio, it's very strong. If you look at their ROAs, which used to be under 1%, it's almost now close to 1.7-1.8%. So the profitability also has, so their NIMs and their margin spreads, everything has got better. The only hangover over there has been the asset quality, which is also a function of the economy downturn that we all are witnessing. But if I have to believe the management, and they have been reiterating quarter after quarter that the worst seems to be over after the FY15 in terms of the additional slippages into NPAs, right? So in fact, I think in one of your shows where Lata had spoken with the chairman or the CEO, where she very clearly said that most likely the NPAs slippages should not be higher than the FY15 numbers in FY16 or even in FY17. So, if I have to believe that, I think the valuations are very attractive. It's probably trading at probably under 13-14 times March 16 earnings. And it has the capacity to take its loan book growth in the range of 15-20% because they have a very high capital adequacy ratio.
All right, Sachin. Thanks a lot for your time today and giving us all those stock ideas. The stock